Let's take a look at the chart action for Bitcoin. Okay, so here is what my chart looks like. And what I was doing is I had limit orders set at the 38% level and the 50% level on the Fibonacci retracement chart. These levels were sitting at 44,200 approximately and 42,955. We actually came down, hit both of those, and filled the limit orders. What I was saying is we have a downtrend. Let's actually just go ahead and delete everything from scratch. We still have these spots down here where I have limit orders, but I'll show you how I got here from scratch. Okay, so basically I was watching two uptrends. We had an uptrend like this from this support, and then we had support right here and support right here. Let's go ahead and draw that second uptrend, something like this. Once we broke this uptrend going to the downside, I set up the Fibonacci retracement levels, or the Fibonacci chart. So we drag from the bottom to the top with the Fibonacci tool, something like this. I like watching the 38% level and the 50% level because sometimes when we trend down, we'll get bounces like we got right here. Right here, I didn't get my limit order filled, but we bounced right at that level and then we got a bounce right there and came up to this downtrend. I was also watching this resistance. Let's go ahead and draw a downtrend. I was watching something like this, and I was saying until we break this downtrend going to the upside, then I'm watching the Fibonacci retracement levels and the previous supports on the daily time frame. Let's jump over to the daily time frame. We were just on the 4-hour time frame. I was also watching these supports right here. We had support right here and support down here. In my opinion, those are the spots that I was looking at. So we'll go ahead and do these orange because orange is basically like a limit order. It's what I kind of look at it like. And then we'll go ahead and copy and paste. We'll go ahead and copy and paste this to the bottom. And these levels are sitting at around 41,000 and 37,769 approximately. So basically, until we break this downtrend going to the upside, I was watching the 38% level and the 50% level, and then 41,000 and 37,769 approximately. Let's go ahead and copy and paste some of these orange lines. We had one right here and then one right here. These ones actually got filled, so I'll actually change this color to yellow. So in general, I like watching these Fibonacci retracement levels because sometimes we get bounces on them. If we go back to the 4-hour time frame, we came down, hit that 50% level and got a little bounce. We didn't really get a bounce. I like to see these bounces come back all the way up to the downtrend, but we didn't actually get to do that. We were just kind of bouncing in between the 38% level and the 50% level. So it looks like we're kind of heading down, and I was saying if we continue to head down, then I'll be watching these previous supports on the daily time frame. So these limit orders got filled, and the other thing I like about these limit orders and previous resistance supports is it gives me places to dollar cost average back in once we break these uptrends. So we broke this uptrend, we broke this uptrend. Once we break them, then that's a bearish signal in my opinion. And look what happened. We broke it, got a big candle down, bounced on the 38% level, got resistance on this downtrend, and then we started heading down and we broke this second downtrend, this second uptrend right here. So now we're watching the Fibonacci retracement levels and these previous supports on the daily time frame. That's what I'm doing anyways. The other thing that I'm looking at is let's go ahead and delete these uptrends because we're pretty much done with those. The things we're focusing now are the downtrends. We have this downtrend right here, and then it looks like we have resistance, and we got another little resistance spot right there. So let's go ahead and do another downtrend. We have something like this. These downtrends will give me a signal that we might be heading back to the upside. So we have this downtrend right here until we break it going to the upside. Then I'm looking at these spots down here. And same with this downtrend. Until we break this downtrend going to the upside, I'm assuming that we're still in a downtrend and it's going to give us some trouble. Like I was saying, I like watching the Fibonacci retracements because sometimes we'll bounce on these levels, come back up to the downtrend, and then come down. Pretty much how we did right here, except sometimes we'll do something like this, or I don't know, it just really depends. But I like using these downtrends as signals that we might be heading back to the upside. And until we break this downtrend, then I'm looking at the previous supports and Fibonacci retracement levels. Let's go ahead and delete everything and we'll look at the moving averages. So the other thing I was talking about, or the other thing that I like looking at, is the moving averages, the 9 moving average specifically. And I was watching it on the daily time frame. We broke above the 9 moving average right here, and we were getting bounces on it going to the upside. Right here, we started testing it, and we were actually below it. This was another signal that we were going to get bearish, in my opinion. So one thing that we can look at is this 9 moving average right here, and until we break back above it, then we can maybe assume that it might give us some trouble. We might get pushed down by it. What I really want to see us do is the 9 moving average come in, something like this, get closer to the price. Right now, it's kind of high above where we are right now. So what I want to see us do is get closer to the price. I want to see the 9 moving average and the price get close. So maybe do something like this. Then we'll have a better chance of breaking through it. Once we break through it, then we can start looking at something like this, how we are getting bounces on it to the upside, as opposed to getting bounces on it to the downside, or getting resistance on it. When we're above it, we can get support on it. When we break below it, then we get resistance on it. Or it's possible, I mean, that's kind of one of the signals that I use. Basically, being below it is bearish and being above it is bullish. So like I said, what I want to see us do is come through. I want to see the 9 moving average get closer to the price, so we'll have an easier time breaking through it, something like that. I've also been talking about the weekly 9 moving average. Right now I'm on the weekly time frame. We broke above the weekly 9 moving average right here. We came down, got a bounce on it, and what I'm thinking, or what I'm hoping, is that maybe we can still get a bounce on it right here. It's sitting at around 41,300 approximately. So let's see if we come down, hit that, and then we could get a bounce. We're still above the 9 moving average on the weekly time frame. The 9 moving average is right here, and the price is above it still. So I think this is better than being below it. Definitely, when we broke below it, then we get resistance on it. When we break above it, hopefully we can get support on it. Hopefully we can get a bounce right here instead of breaking through it. It's possible we break below it, and if we do, that'll be a bearish signal. And we'll want to look at least at the bottoms for a possible bounce still. So in general, I think the main things that I'm watching are these downtrends. We have one right here and one right here. Until we break these downtrends, until we start breaking these downtrends going to the upside, I'm looking at the previous supports on the daily time frame, sitting at around 41,000 and 37,769 approximately. And then I got my limit orders filled at the 38% level and the 50% level. I like using these levels because once we break the uptrend going to the downside, it gives me spots to dollar cost average back in. I don't know where we're going to get the bounce, but these are levels that are possible that we get bounces on. We got support right here in the past, and we got support right here in the past. So let's see if we could get support here or here in the future. This trend line is another thing that we can look at. If we break that going to the upside, then maybe we can start trying to come up and test this second trend line, or the first one, should I say. If we could break above that, then we could get a little more bullish. If we could break above this though, the first thing we're going to want to look at is this top up here. What we want to do is break out of the Fibonacci retracement box, then we can start getting more bullish in general. But if we want to get bullish, this is step 1, this downtrend right here. And then the second step is this downtrend right here. Step 2 to get bullish. And then right here, step 3 to get more bullish. Until then, looking at previous supports and Fibonacci retracement levels. And like I said, the other thing is the moving average. I want to see us break above this moving average. We might have to go a little bit lower, or we might be able to stay in this area here. But what I want to see this do is the moving average come down, and then us get closer to the moving average so we could break through it. This is just my opinion and what I'm looking at. If you're interested in learning more about some of the strategies I use, check out this video right here. It's when I buy and sell, and it goes over some of the things I talked about in this video in some more detail. All right, if you guys liked the video, hit that thumbs up, and I'll see you in the next one.